All right. Good morning, traders. Happy Thursday. Hope everyone is doing well. Screens are up and running. All right. Excellent. Good to see everyone. Okay. So let's get to it. A little bit of prep for today. We've talked quite a bit about Jackson Hole and FOMC meeting minutes yesterday and Powell on Friday. So there is, I would imagine, some chance someone could shove a microphone in front of Jerome Powell. There's some chance there could be a headline, rumor, comment. Chances are we'll hear from other FOMC members. Today's one of those days. I'm going to grab the TV remote. I hate having the TV on when I'm trading, but today might be one of those days because the financial news channels have gone out to Jackson Hole. They parked their desks out there, and there might be some impromptu interviews. So these are not going to be scheduled. That's what's going to make today a little challenging because I won't be able to look at the calendar like we can for example, tomorrow and say that Jerome is scheduled to speak at 10, right? So we're going to have maybe sound bites and things of that nature. But Jackson Hole is going to dominate likely most of the headlines. Apparently, and this is relatively recent, the US and the EU have reached an agreement on a joint statement outlining a trade deal. Now, in and of itself, I don't take a look at headlines and think buy or frankly sell. But I will take a look. I got to sneeze. Excuse me. Woo. Okay. Sorry about that. All right. So what I do know, I'm allergic to the trade deal apparently. What I do know is what we will say is if this news has just come out, right? If this is what is the newest bit of information that, and I'm going to turn my TV on because today it would be helpful to have the TV on. My mom calls it the dumb box, and she's probably not wrong. But it's just another source of information and understanding of volatility for us as traders. I keep it on closed caption. I mute it. Don't want to hear it, but if I glance up at it, it's up there in line with my monitors, by the way. So I have the 9 monitors, and then I have a TV where, say, the 10th monitor would be. Now, EU and US have reached an agreement. Again, joint statement. Not much of a reaction, is there? So just because a bit of news comes out doesn't mean it's going to be reacted to in a very specific way. There are some interesting things that have come out. One of the ones that caught my eye when I was scanning this morning, aside from Jackson Hole, aside from Bostic already spoke, unemployment claims, Philly Fed index, indices are generally weaker. We can see that with the ES on the chart. The interesting thing is we still have flash manufacturing at 9:45 or roughly in 20 minutes. We still have consumer confidence at the top of the hour. So we do have a little bit of a time crunch. So between consumer confidence and existing home sales at the end of the opening range, at the end of the clearing period, I need to have any day trade that we put on. We put on 3 yesterday. We went, 2 for 3? Not too bad. So any day trade that I put on today, I would want to make sure it's triggered and entered by at least, here we go, by at least, I have such a hard time turning this television on. I need 18 different remotes to do it. There we go. So, so I have a time crunch and I need to be in the day trades by 9:50 a.m. because I want that 10 minutes for follow through. I want that 10 minutes for a potential eject button, right? Time-based exit. I may not want to be in the position as we get into the hot zone, the data release. One thing that got my attention is Redfin. So how many of you are familiar with the Redfin website? So this is private data. It's their data from this website, but they released something just after 9 a.m. saying that home purchases are getting canceled at a record rate. So what that means is, according to their data, it's private data. So 15% of home purchases fell through last month, which for them is the highest July rate on record. And whether it's the high home buying costs, the cancellations, by the way, were most common in Texas and Florida. So 15% for their flow, right? This is one website which we could look at as a barometer, maybe echoing to other websites and other home purchases, but that's about 58,000 homes, home purchase agreements that were canceled in July. And that would be 15 point whatever percent of homes that went under contract last month. So that's high. That's high. And if you look at the data comparing 22 to 23 to 24 to 25, it's the highest for some time. You know, these are all things, these are all little bits of data that are going to, just like I noticed that little bit of data, right? Just like I noticed it. Other people are going to notice it too. Is that bullish? I would say not. Also related to homes, we have existing home sales coming out at 10 a.m. Now, if this Redfin data is out there, but probably not in a big way, right? It's a private company, it's a website. But if existing home sales data kind of lumps up on top of that, this could be a cool opportunity to get a pullback in names in ITB, which I do want. Because if we go back to our swing trading watch list, the relative performing watch list that we put together, prioritizing outperforming sectors and the outperforming stocks within them, this is the best way to scan the market, gang. I've looked at all sorts of scanners. How many of you remember TC2000 from back in the day? Thank you for all the bless yous. Gesundheit. Yes, thank you. How many of you remember TC2000 back in the day? I had it too, and that was one of the first scanners that I ever used. And you know, over time, and that would have been in the late 90s, I guess, early 2000s. Over time, I realized I don't want to scan the broader averages just for technical criteria similarity, right? I don't want to scan. What I want to do is I want to find stocks that are in sectors and sectors that are within the indices that are moving together. I call that alignment. And once I really started embracing alignment, many of you will know from the room, our trades are really based on continuation, and trends continue the best. So rather than waiting for something that's not trending to suddenly start moving and then hopefully keep moving, that's a lot of steps. Let's find things that have already overcome those challenges, organize into relative outperforming trends, and grab those. And those are always going to be superior to, you know, what most of the market does, which is they look for a compression and then they look for expansion. Or another way to say it is breakout trading. Breakout trading is fine, but it's not going to outperform trend trading, right? That's why there are probably, I'm looking at my bookshelf behind me, untold number of books that are written about trend followers, turtle traders. Who's heard of the turtles, right? Who's heard of the turtles? Why was that such a big deal? They were trend followers. So it's been out there under the guise of different names. It just works better. So if we can optimize and scan for that, that's going to work a whole lot better, which is the same thing we do as day traders in the morning. So rather than looking at a daily time frame and maybe a month to date or a 30-day look back on those relative performers, today we'll look at a today relative performance. We'll look at a 1 day, and we'll do that through the 5-minute chart, right? So whether it's day trading or swing trading, the mindset is the same. And why is the mindset the same? Because at the end of the day, we're just trading slices of human psychology, right? How many folks have heard it's fear and greed that moves the market? It's not economics. It's not, you know, financial analysis. It's not necessarily the maths, right? That's part of it, but it's still human reaction to it. So here we get this trade deal news. Maybe it'll help the stock market go up on the bell. I wouldn't be surprised. We still have a lot of data to come. And in the meantime, take a look at the structure. So pre-market, I want to mention here at 9:29, ES and NQ are not only below the previous session close, they are in downtrends for now. But what we also know is at 9:30, in 1 minute at 9:30, actually in just a few seconds, we're likely to get those candles of unusual size. And let's see if maybe some of the other data, not just the negative stuff, kicks in. So again, we have Powell tomorrow, probably many impromptu FOMC speakers in beautiful Jackson Hole. It is nice when they're interviewing on TV, Oh my gosh, is that a beautiful state or what? That's probably the one good thing about these Fed chuckleheads being on TV. We get that gorgeous backdrop. All right. So that's yeah. So remember the Warden Brothers TC 2000. You get that little disc in the mail. Oh yeah, and it was what initially taught me how do I want to scan the market? How do I want to find the things that I want to trade? And that's exactly what we do every Monday morning. Yeah, and I don't actually find. And somebody asked me this is a great question. Rog, would you revisit that list throughout the week? You can scan too much, right? I found this to be true. You can look again and again and again and over tweak a watch list, because if we're looking at daily time frames and relative outperformers over the past 30 days or month to date, that list should not be twitchy, right? That should not be twitchy. We have a joke, twitchy little snowflake. It should not be that twitchy, because if it's that twitchy, then where's the follow through? So you can scan too much. And that's why I find Monday and then staying true to that list has served me much better than, well, what's the watch list today? And what's the watch list today? That's actually very counterproductive. Yeah. Utah's gorgeous too. I used to be the chief currency analyst, Alex, for a Forex broker called IBFX, what was her name? Interbank, that's it, Interbank FX. I was a chief currency analyst for many, many years. And they got bought out by TradeStation. Then I was TradeStation's chief currency analyst for a few years. But Interbank FX was in Salt Lake. And oh my gosh, yeah, I used to go out there about 3 times a year and would always drive out to Park City. I took my husband out there one time. It is gorgeous. Yes, it absolutely is. And super nice people. Super nice people. Okay, so let's get to it. Let's get to it. If we are going to look at, here we go, where we are in front of the Federal Reserve, probably not a bad thing to look at to kick off the morning, because that could be some optimism. Where are we in terms of September 17 expectations? They've dropped, gang. So this is not probable. It's still very probable, but we've actually dropped below 80%. This still indicates that the vast majority of traders are still expecting the Federal Reserve to cut rates, but over 80 is just a better place to be at 79.2. We'll know what this is going to be in a better way after Powell speaks tomorrow. Yeah. So this is not a good number relative to where it's been. It's still the most probable outcome, but this really does reflect the uncertainty and, frankly, trust that traders and investors have specifically in Powell. This number is not a number that's moving and grooving because of uncertainty about rate cuts. It's really a trust move, which is fascinating. I don't think we've ever seen so much in the recent years. I don't think we've seen so much discontent around what's going on within the hallowed halls of the Federal Reserve. And that's going to absolutely affect the target rate probabilities, and the Fed fund futures contracts are reflecting that. That will not help any kind of bullish day trading cause this morning. Yeah. All right. So all 4 of the broader averages are below the previous session close. So one of the first questions we ask is, where is price in relation to the line in the sand, right? Where is price in relation to the line in the sand? Which definitely gives us an easy, simple, non-indicator based understanding of whether or not we're in the bullish or bearish hemisphere in traders' minds. We are, let's see, weakest in relation to the point of that line of the sand in the Dow. Dow is down 0.43 from the previous session close, from that point at which we cash closed yesterday. The strongest, here we go. The strongest index in the morning is the Russell. Now remember, we want to let the first 5 to 10 minutes go by as volume comes in, spreads normalize, we get that first candle of unusual size out of the way. We'll see what happens after that. Russell is down 0.44, but it's the one that's actually moving higher in relation to everything else. ES is moving lower on the open, and Q. Russell's actually moving higher on the open on that intraday chart. Okay, so then that takes us over to, well, we do have one open position on our swings, and I kind of like that going into Jackson Hole, and I like that going into Powell tomorrow, just very organically. We've either taken profits and closed out trades in Schwab. We've taken profits now in utilities. We had that alert go out, and that target level has been hit. And so that's really the main position we have in front of Powell, which means we have a lot of capital that we've freed up, and we can get to work on the volatility of the next 2 days to build some positions as we round out August, which is still struggling with quite low volume. Yeah, it's still quite low in terms of volume, which we know historically is very likely. Low volume, low participation means lower follow through. And that's going to affect trend traders and especially momentum traders. Who is most vulnerable in low volume? Momo, absolutely. So while that's imperative to getting a trend, trends are going to have a little bit more resilience in low volume. Momentum is going to be very, very vulnerable. All right. Yeah, I'm looking forward to that fall trading season as well. Absolutely. Absolutely. Me too. And August is what? August is where we sharpen our skills. August is where we prepare. August is where we practice watch list building and position sizing and stop losses. So as we go into September, we're ready to go. We're ready to peak, right? A friend of mine, she was training for a marathon, and she actually, and I don't know if any of you ran a marathon. I have no intention of ever doing it, but she was getting ready to run a marathon. And she'd do her morning practice, and then she'd come over here to hang out for lunch. And I'd say, how many miles did you run? She goes, look, I'm not ever going to run, 26.2? I'm never going to run that till the day of the marathon, right? I'm peaking to that point. So that's kind of neat. It's not like she's running a marathon every day to prepare for a marathon. She's training. And I thought, okay, I like that analogy. I watched part of a marathon on TV once. You and me both. You and me both, Fly. You and me both. All right. So where are we in relation to the previous session close? Below it. Same thing goes with Bitcoin. Now, bonds actually. Oh, you know what's above the previous session close and in a trend? Hold the phone. Hang on. Silver, which was pretty good to us yesterday. Let's go take a look at silver. SI, which we traded through SLV. Ray says, I've driven 26 miles. You and me both. Exactly. Janine, the VIX is above the previous session close. Yeah. And that makes sense when the equities are lower. I don't look at the VIX as anything other than a reflection of the SPX options, right? Yeah. And that's all that it is, by the way. If you look at the calculation in the VIX, it's SPX options. Yeah. Never a bad thing to take a glance at, though. All right, take a look at silver. A couple of things we can take a look at here on silver. So SI, which I would trade via SLV calls this morning, is in an uptrend and above the previous session close. Awesome. Now, so is gold. Let's go take a look at GC. We day traded these two to profits yesterday, and if these two want to cooperate again today, I'm your Huckleberry. So let's go take a look here at here we go. Let's take a look at GC, which I would do via GLD calls. If you're already pretty comfortable, and you have been for a few months, trading GLD calls with the process that I teach you in this room, which is watching the GC so that you can trade GLD or even MGC micros. But start with that GLD. Get a feel for trading the ETF of gold via the options by watching gold futures. And then eventually you'll kind of make your way to, if you even want to, start trading gold futures. Same thing goes with silver. Silver can be a wild one, but as a day trade, it's not too bad at all. So what can I do with silver and gold? If a symbol has an uptrend, right? And in this case, also above the previous session close, which is all the better, then I can do what? I can look for a wave entry, which is our mean reversion. I can look at, frankly, I can also look at the previous. Oh, actually, gold is below the previous session close. I can look at a Darvis, right? Of course, I can look at an hourly price movement range. And in the case of silver, because it's above the previous session close, I might even look at it. So PSC, if uptrend, is above the level, right? So that's what I would focus on there. Those are going to be all choices. But in gold, see how gold is below the previous session close? Obviously, I can't use the previous session close for that. And just in the comparison of gold and silver, right? We always want to be comparing. Silver might be preferable to gold in terms of the fact that it's above the previous session close. That might be, kind of our thinking there. And the previous session close in silver, as you can see here, is right there, and it's in line with the support of the wave. That's pretty cool too. So this gives you a good idea of what we're going to be likely looking at here this morning. Gold and silver at the top of the list. The indices are all still below the previous session close. I'd consider the NAS pretty darn heavy. In terms of sectors, gold miners are in an uptrend. We'll keep an eye on that. GDX. And that is it. That's the only trend. That is the only trend. All right. So that sets us up for the rest of the morning.